Hello and welcome to another edition of Capital Market Live on Channels Television. I am Will Ibong. We take a look at how your investments have performed this week. But first, let's check in on markets outside Nigeria. On Friday, stocks in Europe closed flat ahead of a meeting between President Donald Trump and President Vladimir Putin over the war in Ukraine, a meeting that ended without a ceasefire deal. The stocks Europe 600 shed 0.01%. Regionally, we see Germany's DAX was down 0.07%. We see the FTSE 100 closing down 0.42%, and the CAC 40 in France bucking that trend and rising about 0.7%. Now, looking at other markets in the U.S. now, we see Asia markets. We see markets rose as investors assess Japan's GDP and the flurry of Chinese economic data. Japan's Nikkei 225 rose 1.71%. We see a record high after the country's second quarter GDP grew by 0.3%, outpacing forecasts. Despite tariff headwinds now. Shanghai in mainland China, we see that also in the green. If we look at on the screen there, Shanghai is up 0.83%. The Hang Seng Index is up 0.98% in Hong Kong. And the Nikkei 225 in Japan, we see it surging to 43,000 points there. Now, let's look at the U.S. markets. How they fare at the close of business on Friday. We see the S&P 500 slipping on Friday after hitting a record high as investors took gains off the table after a strong week. The S&P 500, we see it settling 0.29%, shedding some of that gain we saw there. Dow Jones Industrial Average up. That's the outlier in the market, 0.08%. And the NASDAQ, we see it down 0.4%. Now we come back to Nigeria, where we see the NASD, the OTC, that's over-the-counter market, closing the week mixed. We see the index falling 1.84% to 3,584 points there, while the market capitalization inched up 0.29%. But market activity surged. We see trade volume jumped 160.65% to 70.84 billion units, and value rose 580.65% to 1.1 billion now, though deals slipped about 2.75% to 177. See that. Now, IGI, that's Industrial and General Insurance, top gainers, followed by Double One PLC and Aecon Petroleum. On the losers chart, we see Joe Fluids. If we don't have that on the screen, you see Joe Fluids. We also see Priceline Campina Wamco falling 1.44% to 68 naira 61 kobo, and Okitipupa Oil Palm dipped 1.66% to 33 naira 30 kobo. Now, the most traded the stocks on that OTC exchange were Okitipupa Oil Palm, Priceline Campina Wamco, and CSCS. Now, let's look at trading on the Nigerian exchange. It closed the week lower. That's for the first time in 11 weeks. And the first time in August. The all-share index shed 0.77% to 144,628.2 points, losing that 145,000 points we have there. And market capitalization, we see it also dropping to 91.502 trillion naira. Investors, we see them trading about 8.5 billion shares. That was what 99.94 billion naira in 134,577 deals, and that was weaker than the previous week. We see that low activity there, investors taking profit. Sector performance was mostly bearish. We see the banking down 0.23%, consumer goods was also down nearly 1%, industrial goods down 0.84%, oil and gas more than 1%, down 1.42%. So down the split. Insurance, although, was the outlier, gaining 8.21% for the week. Not bad, especially, well, not so good, especially coming from last week's gain of over 40%. Now, top gainers were Mutual Benefits, Triple G, and Sunu Assurances. The losers included UPDC, Living Trust, and Beggar Paints. Universal Insurance, Linkage Assurance, and ICO were the most traded stocks. So the insurance dominated top trades for the week. Now, insurance index, we're still talking about the insurance index, as the insurance index rally intensifies, up over 25%, well, 8% this week. Some investors are already worried if the rally will be sustainable. Now, speaking on the reason for the bullish sentiment, the managing director of AfriInvest Research and Consulting, Mr. Abiodun Kerikpe, the sector generated over 1 trillion naira within days, marking surprising rebound after a period of weak performance. He was a guest on Business Morning this week. Let's take a listen.
There's more that it has started earlier than now, but we just didn't see it. So if you take your mind back 2014, look at the numbers that came out from the sector in terms of gross premium rating, that went up 71%. And for the first time in history, the industry or that sector pretty much grossed 1.1 trillion in gross premium rating. That's significant for a sector or an industry that over the last 10 to 15 years, I mean, the numbers have been quite appalling. And this, if you situate this in the context that there are still many challenges facing the sector. If you look at it from an insurance penetration level, people talk about this a lot. Nigeria, compare it to the rest of Africa and some of the MENA countries in the MENA group, you see that penetration for Nigeria is still significantly low. We should be looking forward to some upward repricing in share prices because these insurers have to come to market to raise capital. They want to raise this capital at some very decent valuation, right, such that they can attract as much funds as possible to meet up the capital requirement. Again, you want to ask yourself, in the industry, as of today, which of those players is currently meeting the capitalization or currently has a gap? So you have a couple of names. I mean, we run these numbers every now and then. About 5 names clearly already hit the capitalization mark.
That was the Managing Director of AfriInvest Research and Consulting, Mr. Abiodun Kerikpe. And right after the discussion, I must say on Thursday, insurance investors decided to take profit. But to have this discussion and see why the insurance sector is kind of like, is it dipping or is it peaking yet? Is that the end? Is it for insurance? Ambrose Omodian, Chief Research Officer, Invest Data Consulting, and Rotimi Olubi, Capital Market Analyst, are here in the studio to have this discussion with us. Good to have you both in the studio today.
That's for having me.
So we've seen insurance now, well, when we compare to what we saw last week, up over 40% last week, and in this week we see 8.21%. Is this the end of the road for insurance? Should we start looking at another sector?
Yeah, actually,
well, first of all, I'll leave the question to Ambrose because he's been very passionate about the insurance stuff.
Actually, for me, insurance provides an opportunity for investors to diversify their portfolio. If you look at the history of insurance in Nigeria, it's a sector that has been regulated for a long time. Despite the series of recapitalization here and there, still, this is a sector that I saw stock at 20 kobo per share. And tell you that sector has been regulated, as I said earlier. But now that government are giving like a push to it, that with these reforms we are seeing, and also trying to capitalize to become bigger, to take bigger risks, and also to kind of also whether the new or the envisaged for $1 trillion economy, you need a stronger financial sector, which insurance is part of them. I believe that the pullback, as you just mentioned, for me is an opportunity to position your portfolio because most of these insurance companies, some of them already have the capacity of surpassing what the requirement by the regulator or the government is for now. And it shows that those companies also do bigger business that will impact their bottom line. And if you look also the reform, there's a lot of room that this insurance will have bigger business compared to before because of the act. But I believe that if the operators and the managers can take advantage of this opportunity government are giving them, it's a good deal for investors and for the economy.
So let me just ask you again, do you think insurance stocks are also just cooling off right now and just preparing for consolidating for another rally?
I would agree with you because one of the things I noticed in the last few weeks is that we've seen increased volume in terms of insurance stocks being traded on the floor of the stock exchange. We're seeing some insurance companies trading as much as over 200 million units of shares in one single trading day. That tells you that there's renewed interest in the share price, in the stocks of the insurance sector. And I would expect that this is just a mild pullback, given that they've appreciated significantly. We would expect that in the coming week we'll see a continuity from where we stop.
Okay, but you think it's a genuine investor confidence in the insurance sector, or is just a speculative play as a result of the reform, the act that was just signed?
There are different participants in the market. There are speculators, there are investors, there are arbitrageurs, right? Those things impact market performance, right? So we see speculators looking at the fact that they could make some small spread. We also see investors thinking that perhaps there's repricing going on in terms of share prices of insurance, so they are also trying to partake.
Okay, so let's just say that the rally for the insurance stocks is not over yet.
Yeah.
So people, investors, traders should still position themselves. So this is a good opportunity for a pull. I mean, the pullback is a good opportunity for investors or prospective players to enter the market for insurance.
Yes.
Okay, so let's just quickly just dive into something else that happened this week. On Monday, we saw Oando holding their 46th annual general meeting and also an extraordinary general meeting to address capital reduction. The company seems to want to get in some money. People are a bit shaky about what's going on with Oando.
Yeah.
And, you know, they want to raise this fresh capital of about 500 billion naira. So how should investors interpret this? Is it a cleanup of the past losses? Because it seems like they're trying to, is it like a capital diminution here or capital reduction?
Not
because
yet.
they seem to be like, oh, we need money. We need to show up our capital because we've made some losses. So how should investors see this? Is it a fresh push for growth for the company, or just, how do I say it?
You know, like every investor in the market, you have different objectives for being in the market. Also, different companies can deliver different perspective to you, in terms of return to you. For me, Oando is a stock that before now, it has rallied on the market, not because of fundamental, but trying to put their house in order is a welcome development for me. But want us to come out clean and who's transparent for investors to know exactly where they are going. Raising money is not the issue. We know when we want to acquire the ConocoPhillips before now. No, the assets people will launch that Oando will launch to hit the roof, or wouldn't still go anywhere. But I think that if they learn from that experience that they will mismanage those assets and all those stuff, I would say because they are not reflected on their performance. I say they mismanage. If now they are coming to raise a additional fund, how are they guaranteeing investors that yes, they've come to this fund that also will hope for the future? For me, I need to start from, let us start from the corporate governance issue. Reviewing their book is a welcome development. Or for me, I would advise investors wait and see where they are going. Even the setup where they are playing is very lucrative because like Nigeria now, if we're able to meet our quota with OPEC, it's a plus for us. Which Oando will play a role to support that meeting that quota. But I believe that Oando should come up clean for us to start playing it. But for those like us that are speculative, can go in and out of Oando. And like my colleague here, who know how to go in about Oando should come clean and let investors know where they are going. I will leave it there for Mr. Rotimi to continue.
So let me just ask you, Mr. Rotimi, now, the shareholders back this move. They're supporting the capital raise. Is it that they have confidence in Oando, or it's just that they just want to cut their losses? Like, oh, no, please just raise money. We don't care. Right now, we just want to get out of the market.
Yeah.
There's nothing like cut losses, right? For shareholders to have approved this capital raise, it shows that they have confidence in the future of Oando. In fact, I see it as a bold move by the management of Oando to approach the market despite the sentiment level, right, to raise capital. It's positive. Capital restructuring for a company, given their present high leverage position, I think is a welcome idea, right? If you see companies like Nigerian breweries, they restructured their capital. International breweries also restructured their capital. We can see the impact in terms of their profitability, right? We can see the repricing their share price in the market. So I would expect that it's a positive move. Apart from the fact that they are looking at raising 500 billion, they're also looking at converting some debt to equity, right? Oando currently sits on a negative shareholder fund. If they successfully make this a reality, that means that equity becomes positive. And then when equity becomes positive, that means that this value creation for shareholders, net asset value per share improves, right? I would expect that there can be a re-rating in the share price of the stock in the medium to long term. It also means that the company begins to have a lower cost of finance, right? That means that they'll free up cash for future dividend payment, right? In terms of its peers, one of the unique things about Oando, despite the volatility around the security, is one of the most liquid stock in the market, right? And the point is that the future still holds promising for the shares of Oando in terms of share price.
Okay, just speaking about the converting over, that's about $300 million debt to equity. How significant would it be for Oando's balance sheet and for the wider market? You've mentioned about how significant would this be for Oando's balance sheet?
I know that there will be improved balance sheet strength if because the company is highly levered, right? And there's a need for equity and debt to be normalized. If equity debt is normalized, that means they have a balanced capital structure, right? And that means that profitability, improved profitability is just around the corner, right? In terms of auditors' view of the company's numbers in the past, we may likely see a revised version of those the distressed view that we've seen in the past in the last 2 audited accounts. That means that the company becomes a more sustainable company into the future in terms of a going concern. I think that we'll see a better balance sheet.
Okay, so we're looking forward moving right now for O&O yes. with this debt to equity and the capital raise. Yes. But let's take a quick moment, a quick break. Capital Markets continues right after. Stay tuned.
There are places you would like to go. There are faces you would like to see.
My palm is bruised. It's a tiny scar, but it's very painful.
Too many exciting things happening all at once.
Sometimes I've always loved playing the villain.
But you can't be everywhere. Guess what? Yes, we can. Your favorite lifestyle content lives here. Let us be your eyes and ears here on Entertainment News on Channels Television.
Welcome back. If you're just joining us, you're watching Capital Market Live on Channels Television. We've been discussing Oando's fresh approach to the market to raise over about 500 billion naira. And is this the right move for the company? And how does it impact the wider market? We still have Ambrose Omodion, Chief Research Officer, Invest Data Consulting, and Rotimi Olubi, Capital Market Analyst, stay with us in the studio to discuss this. So, Ambrose, I'm coming to you now. With the capital raise now, about 10 billion shares will be issued to the market. What's the likely impact for existing shareholders and possibly for Oando's stock price? He has mentioned that there will be an uplift in the stock price. Well, what do you see this doing to Oando's share price? And
actually, if you look at that industry, see that the share in issue of that industry are very few. Oando coming up additional 10 billion, that becomes 22 billion ordinary share for Oando. And compared to others in that industry, so that Oando is widely, in terms of share. That means just like in a family you have 12 children and 4 children. The alpha said, you want to have 12 children who eat less chicken, why do you want to have 4 children with better chicken? Now that Oando is trying to capitalize, we want to see how this can be turned into profit at the end of the day, so that they can start giving investors value for their money. Because after enlarging your share, like my colleague just said here, to trade Oando in the market is very, very because it's liquid. But now they're going to increase their share. What will impact on the price? That means investors should know their investment objective. Are you a trader in the market? Are you investing for long term? Because you provide a lot of opportunity for different players in the market. That means you need to sit down and see, how do you view Oando? Are you investing for long term? I want to be there for 5 years, 3 years, 4 years? I want to trade because before now, I tell you that it's a momentum stock. That news come, it goes up, people trade, make money, they come out from the stock. But now they are saying that they want to do capitalization. How far will they go with it? And also how the market, kind of view Oando. Will I put my money more into their right issue or their public offer they want to do? These are the things that investors should consider. That's why I say you must have your goal looking the way for Oando. Because when you increase your share in issue, it's going to tell on your price. It's not just increase your share, but if you're able to double your earnings, your performance, that is where you can make money. But if Oando continue to enlarge their share in issue, and this kind of performance we're seeing continue, I think they go nowhere until they double their performance with also with this improved capital. For me, that is a way I can see. That's why to say what my colleague just said, that Oando has potential, but if you're investing there, you have to also be very careful putting your money in Oando for short term.
I think you have an opinion on what Ambrose is saying right now.
So when it comes to the market, right, there are different participants in the market.
Exactly.
Some people are capital market is for long term, right? Right. So I don't know why we just suddenly think that you must put money tomorrow, today, and then tomorrow you should reap, right? You're investing in an enterprise, right? They have their going concern objective, right? And then so if you're long a stock, you just stay long, right? You wait through the different cycles, right? Once upon a time, sometime during COVID in 2020, the share price was as low as 2 to 5 naira, right? Today we're talking about 15 naira, right? It shows it's just not it's not one person's event, right?
Exactly.
It's a collective event, right, of different participants in the market. Hence, we've seen improvement in the share price, right? So given their current capital restructuring intention, I am optimistic that if it's well harnessed, right, it could change the narrative of the security. It will change the narrative of the company. As soon as value is unlocked for shareholders, what else would you expect? Price appreciation, right? So the onus is on the management to see, to maximize this capital raising initiative so that it gets to a logical conclusion. And then shareholders would see it, and then prospective shareholders will also come on board.
Okay, so Ambrose, do you see this as Oando's move as a long-term growth positioning, or is just a survival strategy right now that we just need to come out and break even, and they're seeing their colleagues, well, their counterparts in the oil and gas sector doing so well, and like we need to do better. So issuing additional 10 billion shares into the market, is that really going to do well for that stock price? Because when the stocks are a lot in the market, you know what it does. It's kind of like, is there value in that stock? Are they underpriced? Are they overpriced? So what is it? Long-term growth or survival for Oando?
Just like my colleague just said, you know, long-term growth, because he said, I agree with him that capital market is long-term perspective for it. But for those that are thinking long-term should know also their position in Oando. But I believe that increase in share of Oando, fine, I would say it's more liquid, you can trade anytime, but increase in share and your performance is not matching it, will further, you know, kind of dilute your what you're earning per share. And without earning per share, you can't pay good dividend, price cannot appreciate. But if they can come on board with this capitalization, and like I said, they go a long way and also make meaning out of it by putting a company in the right perspective, confidence will start coming. Because as I speak now, confidence in Oando in the market is very, very low. Corporate governance is very, very low. They need to come out now and become strict direct so that investor can have that confidence and put money for long term. Because if you want to put money in a company for long term, you must see where they are going and where they are coming from. Now, they have a negative shareholder. I tell you, in that industry, they are the most geared company in that industry. And they are already, as I said, they have negative shareholders fund. That means if you want to restructure all your balance sheet, you need to take no time to do that. For me, if you want to stay with the Oando for the next 10 years or 5 years, it depends on investors. Like you just said, it's long term. But personally, I can throw Oando with information. Just like momentum investor, go in and come out. That is why I said I agree with him. It's a stock that you can go in and make money. But it depends on, you know, on information you're having also. And that's why, you know, your investment objective is very key, and kind of your source of fund to trade Oando is also very, very important. Let's wait and see what Oando is going. For me, it's not a bad place to go, but with caution again.
Let's go broader now. Let's look at the macros, what's coming in. We're seeing inflation numbers coming in. Ambrose, I'm asking you now because it actually impacts, you know, a company's performance, how, you know, the economy is, you know, is doing. So we see inflation ticking down for the 4th consecutive month, you know, but the pace at which it's slowing right now seems to be slower, you know, because we see month-to-month rising at a faster rate now. Are we at a turning point where we could just see inflation going flat, or we see it going back up?
No, actually, let's start from the rebase effects and the base year effect that I've seen on this, the new inflation that we're seeing in Nigeria. For me, I'm not surprised that we're seeing a slow decline, as you just said. But if you look at on month-to-month basis, the food inflation is already looking up. That's a sign that, yes, we might see a reversal in the month of August that we already. For June, we saw a marginal decline, which is good. But also, if you look at globally now, we can see that most of the inflation figures that are released so far, global, you know, Africa, everywhere, all of them are tilting down to the south. So that, yes, even a part of you know, the tariff that we was afraid of on the duplication, it's not reflecting much on most of the matured economy. Here in Nigeria, we are seeing, because don't forget that this is also our, you know, harvest period again. Harvest period for that is why we are seeing this kind of. That means after the harvest period, what we see, it might be an uptrend. But for me, it's a good sign that yes, our macroeconomic are looking positive. That was a pointer that we're likely to see, you know, a slow, you know, our interest. Because don't forget that in any economy, data is what the, you know, PCBN, monetary policy will use to take decision. They don't just decision out of their head. They look at data. Now we're seeing that for the, you know, for this year, for January to date, we have seen a stable interest rate, no adjustment. But 2024, we saw almost throughout the year there was hike. This year, no hike so far. But inflation is also looking southward. That's a sign that yes, we might likely start, you know, taking our interest rate to drive the economy. But I tell you that if really you want to achieve your 4% forecast for the government, and World Bank 3.4, you need to kind of cut inflation to people have access to cheaper funds to drive their business. That also drive, because GDP is about activities. It's not about just having numbers. If there's no activity because funds are costly for investors or the economists or the businessmen, we need to start cutting inflation gradually, likely like 25 basis points in the next MPC. If it happens, that will also be a good for both the market, the economy, and also Nigeria as a whole, because cost of funds is very, very high to borrow and invest.
Well, you talked about we need rate cuts right now, but I just want to ask Mr. Rotimi, if inflation should go up, how do you think the CBN should react to this?
So as far as now is concerned, they're watching those numbers.
Exactly.
Right? Yeah, there are different variables that have contributed to either it's increasing or reducing. But if you look at it, it's been revolving around the main level. We might likely be around this level for a while. Even as regulators, as the CBN, they also want rates to come down, right? Because the cost of doing business is really high, right? So we need to rejiggle the economy by reducing interest rate, right? So some businesses are struggling, right? So it's an indicator that has everybody's eye on.
So do you think the central bank, how much rate cut are you expecting here? 25 basis points or a hold, a continued hold?
I doubt to see any rate cuts for the rest of the year. Maybe sometime early next year, we may likely see something in that direction. Because as far as now is concerned, it's a metrics that they are very concerned about, right? Bringing it down, is it sustainable? Because they're also looking at the FX side of things, right? Right. They want the currency to also stabilize, and that's a major decision for them to make.
Thank you so much, gentlemen, for your perspective on this show. Mr. Ambrose Omodion, Chief Research Officer, Invest Data Consulting, Mr. Rotimi Olubi, Capital Market Analyst. It was a pleasure having you both on the program.
Thanks for having us.
And that's the end of Capital Market for this today. We'll look forward to having you next week. But remember, have a plan, trade your plan, and get information. I'll see you next week. Stay tuned. My name is Will Ibong. Catch you later.